Hello, everyone. Good evening. How are we doing today? Let's go up into a weekly chart. Mm. Hello, Denisha. Hope you had a good weekend. Thanks for joining us. Mayowa King, hope you're doing good. Thanks for joining. Ashley, what's going on? Appreciate you joining us. Olawale, thank you. How are you doing, sir? And Alistair, awesome. All right, so before we get into it, just a couple things. Going into the following week, we'll be back to the usual, everything on time, on point, just trying to make things work while on vacation. It's not the easiest, but we've been doing this straight for about over 6 months now, so I wanted to keep it coming and not skip any sessions just to have that consistency going. But with that being said, discuss a few more things before we go ahead and get into it. So I'm a little late, long day out on the water. And yes, I did catch quite a few fish. So if you guys want to join my Adora Trading chat, I will be more than likely sending a picture of the fish I was catching. Peacock bass to be specific. So we're eating good tonight over here. But without any further ado, let's go ahead and get right into it. So the economic calendar, looking at it for this week, pulling it up. Hey Hassan, what's going on, my man? All right, so Tuesday, pretty much light on the economic news front. Bank holiday on Monday. So one thing that I've learned from experience is that the AM session after a bank holiday is typically unfavorable. And the reason for this, I believe, is because a lot of retail traders, are just antsy. They can't wait for the casino to open, and they just want to get in there and roll the dice. So I think that consolidation function allows smart money traders to analyze what the market's likely to do, what's setting up moving forward. So I typically let the AM session go after a holiday, especially if there's no news. That's what I'm doing. You do as you please. And then keeping in mind, Wednesday we have Fed Chair Powell and then high impact news drivers the rest of the week. So I'm expecting more animation to be Wednesday, Thursday, and also into Friday. So with that being said, don't have my mouse. So we're going to be riding dirty. Awesome. All right, let's get into dollar index here on the weekly chart. So beautiful delivery lower as we expected. Nice expansion into discount levels from last week. More specifically, trading lower from this bearish order block, mean threshold at the 104,540 level. We called it higher to the upside, and then we called it lower on the rotation down. So what I will be looking for on a weekly chart is these relative equal lows here have my attention. We do have longer term bearish order flow. We've retraded to some measure of premium. The market showed a willingness to want to trade lower. And then now I'm expecting these relative equal lows here to be in the crosshairs moving forward. One thing that I also did want to mention is we have this weekly fair value gap here in purple. And this was an inversion fair value gap that we did call support when we were bullish. And then I also shared last week, now dropping down into a daily chart, I shared with you all last week that we would get below this and then use it as resistance. So I'm not just throwing out random levels, telling you guys it might go here, we might go here. I'm telling you the exact levels the algorithm's going to refer to before repricing lower. So what does that mean? If I'm thinking we're going to trade down to inefficiencies here, order block, sell side, I'm going to expect the algorithm to want to reprice to these premium arrays to offer that smart money short before accelerating lower into our discount objectives. So as I've said, I'm not just throwing levels out here. I'm telling you guys exactly how the algorithm is going to react at specific levels. And then we can use that in our analysis. And then as always, I give you guys an invalidation level. So it's never, okay, here are two sides to the market. Look at how smart I am at the end of the week. I'm telling you guys, okay, this is what I'm expecting. But if I'm wrong, it will do this. So we always have a contingency plan for if what we're looking for doesn't always pan out. So just reviewing last week's price action in here. As soon as this candle displaced lower, shifting this market structure here, we immediately began looking for lower prices. Why? There's several confluences that led to that analysis or bias. One of the main reasons is how we traded at these premium arrays. We traded up here, very lethargic, anemic price action, no bodies, were able to close above that daily order block. So just recapping, and also the mean threshold of that weekly order block, and we have this breaker on the daily chart extending that through. So a lot of sensitivity around these price levels. If you note, zooming in here, zoom in right here. So looking at this line here, that is our daily bearish order block. So look at how the body stops here on point, and then how many times that algorithm refers to this level. We bump it here once more, body closure on it, but not above it, very key. And then we reprice it a few more times before dropping down and displacing. So several things contributed to my bearish bias going into the last couple weeks. And then of course the shift in market structure lower, confirmed also with the bond market and the euro, allowed me to trust that. So I told you guys going into the last week that we're going to trade into this fair value gap here, and that's where I'd want to see it drop. And then we trade into it, bodies unable to trade above consequent encroachment, indicating what? That the market is weak. We trade down through this weekly fair value gap, which was an inversion level here. But within the narrative or order flow that we're reading, we have to adjust how we expect these PD arrays to react. So when bullish, I said we'd find support here. And now when bearish, I said this would act as resistance. So we traded back up into it, displacing lower into the discount levels. So beautiful overall delivery on the dollar index. So now that we have the context for what happened, let's go ahead and give some forecasts and what I'll be expecting moving forward. So a lot of displacement and energy on the downside. So I have no interest in going long this market. So what I will be expecting is further bullish order flow, premium arrays acting as resistance, just as we're seeing here, premium array reject, premium array reject. So I'll be looking for these relative equal lows here as I highlighted on a weekly chart. So let's go ahead and mark out this sell side liquidity. So what I would want to see is price trade up into this fair value gap in here. We could even trade it as high as the volume imbalance in here. However, I wouldn't favor that as much because we're so close to the sell side. I'd like to see us trade up into this premium array and displace lower into that sell side. So for targets going into this week, as I said, I want to see the market drop from this daily fair value gap, going no higher than this inversion fair value gap here. And then on the downside, I like a first target as previous week's low being the 102 big figure number. Through that takes us into this inefficiency in a discount here at the 101.8 big figure number. And then through that, I like the lows here at 101 even, relative equal lows, sell side below there. And then the ultimate objective to me is the 100.8 level, which are these relative equal lows on the downside. So with that, let's go ahead and drop down into a 4-hour now. I'm going to show you guys a market maker model, further confirmation. So because I was looking for lower prices, I'm also internalizing this price action here as a market maker sell model. Here I see the original consolidation. Here, smart money reversal. The reason I like this as a smart money reversal is comparing the price action to pound. So while we have dollar making higher highs here, British pound is telling the narrative that it's not willing to. So that SMT, and then also comparing euro real quick. Do it right. So while we see here, euro is putting in lower lows, while we see that pound is failing to do so. So we also have that SMT between correlated assets, allowing me to trust that we are indeed seeing a market maker sell model in here. Obviously, with all the context on a weekly and daily chart I've already showed, this allowed me to trust that rotation lower into a sell program. So we see strong displacement lower, shifting market structure here. This is a critical structure point because it is an intermediate term low, because it's between a intermediate term high here and here. So this is a significant break in market structure, meaning it's going to turn the tides on a higher time frame, whereas just a simple market structure shift can be just an intraday reversal or something short-lived, whereas a break in market structure is much more significant on the higher time frames. So as I said, displacement, trading back up into these premium arrays here, we have this breaker, reject lower, and then again, note the sensitivity around that daily order block. Displacement lower again. Look at how we're trading through the lows very aggressively. We trade back into the premium arrays, reject, trade back into this purple level, which keep in mind is that weekly. Hold on, I'm trying to drag without my mouse. One moment. So we also have that weekly inversion fair value gap. As I said, I highlighted to you guys this would act as resistance. Trade below it, trade back into it. Where do we stop? That 50% consequent encroachment. None of the bodies are able to get above that. And then we continue flushing lower into the sell side liquidity here. So I am expecting this market maker sell model to complete and deliver us below this original consolidation. Let me check my notes momentarily. All right, awesome. Let's go ahead and transition into forex. Let's look at euro. Awesome. All right, so let's start on the weekly chart. All right, so we traded down to this bullish order block here on euro. Just gonna extend the line out. This was a downside objective that we were looking for in terms of a premium array to be delivered to. Traded below it. Look at the beautiful respect of the bodies. Further reason for me to trust bullishness. And then just a beautiful repricing into this weekly fair value gap that I took our attention to last week. So beautiful swing model, getting long at the weekly opening as soon as we manipulate below that opening price. Beautiful expansion right into the premium array we were looking for. So now moving forward, what I will be interested to see is this buy side liquidity here at the 101.1 big figure number. That has my interest on a weekly. And then through that, I like this volume imbalance here. We have this inefficiency that has not had a body laid over it. So the fact that we traded down to the discount arrays are showing a willingness to rally. I will be expecting the market to deliver higher into these key levels. So some things to note here on a weekly chart is how we found support inside this weekly order block and then the breaker on pound, and I'll cover that in a moment. And pound was the strength leader to the upside, and I'll go ahead and cover pound in a moment. So look at how we're already showing respect for this weekly fair value gap. We see price traded to the low end, and now we're reacting higher off that. So I would want to see support inside discount arrays if we are going to attack the buy side liquidity here at the levels I highlighted on a weekly chart. So now dropping down into our daily. Awesome. Okay, so all premium levels repriced to handsomely. So after this move lower here, we traded down into this inefficiency, which we were calling lower, relative equal lows here. Beautiful delivery into our sell side and this discount inefficiency. Also overlapped with this black line, which is that weekly bullish order block. Note here how the bodies are showing respect for this daily fair value gap. So I also highlighted to you guys before this move higher, but these are just all about confluences that I'm using in my analysis to predict higher prices. So the fact that the bodies were unable to close below it, that's telling me narrative. That's telling me that the market is looking to rally and we are going to go higher. So as soon as I saw this shift in market structure here, I was able to trust that because I'm confirming it with intermarket analysis. Because I liked higher prices for bonds, because I liked higher prices for indexes, I'm able to trust this shift in market structure instead of just looking at random swing points and hoping that it's a market structure shift. I know exactly what I'm looking for to qualify or invalidate my bias. So there's absolutely no guesswork here. So opening last week here on Monday, I said I would want to see us rally from this daily fair value gap, traded down into it, and then beautiful expansion higher. So if let's say you're a swing trader, you have a full-time job, you run a business, or you're in school and you're not able to be in front of these intraday timeframes, what's available with this skill set and what's provided here is potential swing trading opportunities. So just highlighting one right here. So if I'm telling you that the market's going to rally from here, this is where the low is going to manifest. Where would a valid stop loss be? And not that I'm giving trade advice, but if you decide to incur risk and take these trades, I'm just sharing education how you could potentially do so. So as a swing trader, you'd be managing trades on a daily, maybe 4 hour, maybe 1 hour if you want to refine entries. However, the bulk of your analysis will be on that daily, which it is anyway, even if you're an intraday trader, but more specifically for swing trading. So as I said, entry in that fair value gap, a good stop would be below this candle here because we have a bullish order block and a fair value gap. And we have a wick consequent encroachment. So all those levels shouldn't be violated if we are going to be bullish. So for those of you guys that are able to read between the lines and what we're doing here. If I'm telling you that I want to see market rally from here, for those of you guys that know how to trade, you know how to place a stop loss, you know how to manage risk and take advantage of it. There's nothing wrong with a 2.5 to 1 just on a daily chart, getting long the fair value gap and riding the weekly expansion. So let's say I am expecting these relative equal highs to be delivered. So now you can take a partial here as soon as we get into premium, because remember, we like to accumulate long positions in discount. And then once we get into a premium, let me go ahead and mark it out for you guys. Once we get into premium, which is above this equilibrium level, we like to start looking to distribute our long positions. So a valid partial would absolutely be here in premium valuation. And then you can hold a piece of the position to see if we then want to rally to these relative equal highs here and this weekly volume imbalance. So it's figured I'd throw that in there, how you can use these analysis. So rally from that daily fair value gap, repricing through this bearish order block. So I'm not looking at this order block and fair value gap as a short. Why? Because order flows bullish, apologies. So I'm looking for us to trade to and through premium arrays, not to and then reject. So beautiful displacement through it, trading through this buy side and into this last objective I gave, which was the daily fair value gap. So now moving forward into this week now, same way as I'm seeing a market maker sell model on Dixie, I'm seeing a market maker buy model on Euro, original consolidation, smart money reversal. And then again, why am I trusting that as a smart money reversal? Because here we see pound unwilling to make the lower low right here. So we have this SMT here between pound here and Euro inside of a discount when the dollar index is shifting market structure lower. So we have several confluences that get in alignment to make what we do here high probability. So let me see if I have anything more in my notes for a daily chart. All right, awesome. Let's go ahead and drop into a 4-hour now. So sell side of the curve, buy side of the curve. So moving forward into next week, actually, let me give you guys my targets on a daily real quick. So if we are to go higher and deliver these relative equal highs in the volume imbalance, I would want to see price find support inside of this fair value gap here below market price to then send us higher. So I'd be interested in seeing something like this, find support, and then rally higher to the premium levels. Trading and closing below this fair value gap is much less bullish, so I would not be favoring that. So for a first objective on the upside for Euro, I'll be looking at the previous week's high here, call it 1.0797. Through that, I like the bearish order block here at the, call it 1.097. Here, that opening price of these consecutive up close candles, the highest up close is what I use as the bearish order block. So that'd be a nice second objective for the week if you're intraday trading to take a partial or whatever your trading model is. And the reason we give several targets is, as I said, because let's say you're long from down here. Well, here's a fair value gap. That's a nice partial on a day trade. If you're trading the daily range on Wednesday, get long below that opening price, distribute it, as we trade to these premium levels being that order block and fair value gap. And then another take profit for this intraday trade could be this weekly fair value gap in here. So for my further upside objectives, these relative equal highs at the 1.09 level. And then through that, I like the 1.11 number inside this volume imbalance. And then I'll be interested to see how we trade here moving forward. So going to the pound now. Actually, I'll let these back on now. All right, so on a weekly chart, so I called this higher on a weekly basis here. So the buy side was delivered nicely, so I'll leave that on the chart. So remember last week when we traded down into here, I said I liked how we were trading down into this bullish breaker, and then we also saw that SMT. So this up close candle before the lower low, trading above it. This is the bullish breaker I told you guys we'd rally higher from. And then we saw a beautiful expansion into the buy side here. And then I shared the last target being this weekly fair value gap. So look at the beautiful repricing right to the high end, delivering to the levels that we're looking at on a consistent basis. So beautiful delivery here, bodies closing right on that fair value gap, beautiful delivery. And then another thing is I also shared with you guys that the British pound would be stronger And then looking at your own charts, I'm sure your guys' look the same as mine. And as you guys can see, pound already repriced through the buy side and into the inefficiency, whereas euro's much further behind. So we forecasted this ahead of time, and British pound was the better longs. So for those of you guys that are in our Telegram chat, you guys saw that we took a swing position here on the British pound here at Adora Trading. So while we focused on pound versus euro, I would counsel you to watch last week's live stream as I go into detail as to why I'm expecting higher prices on pound. And obviously I said it would give you the most bang for your buck for longs. So here on a daily chart now, we traded lower, saw that SMT as I highlighted, traded higher, shifting market structure, traded back down into this bullish order block, opening price here. The opening price and the high, the sensitive levels, and then we rally higher, shift market structure once more. This time we do it more meaningfully with the fair value gap. So I told you guys if order flow is going to remain bullish, these down close candles will support price. More specifically, inside of this daily fair value gap, we would want to see a rally. So we saw that beautifully. Look at the bodies beautifully respecting that fair value gap before pumping higher through this fair value gap and into the buy side liquidity, and then completely repricing this volume imbalance. So overall, clean delivery on pound, exactly what we were looking for. So now going into this week, I will be favoring longs in euro. Why? Because it's the sixth sister. Because pound has already repriced to the high end of the premium objectives I was looking for, and the buy side liquidity, euro is going to likely need to catch up. So I'm going to forecast that euro will be the relative strength leader this week based off that sixth sister concept. So another thing I wanted to note here is look at the beautiful use of this fair value gap, how we extend that through, and then look at how we close above it. So the fact that we close above it indicates that we're likely going higher. So essentially what I'm doing here with you guys is I'm sharing with you guys how to read price delivery from the perspective of smart money or ICT or these market makers. So it's essentially like decoding the matrix. When you're looking at these charts, we're like Neo in here, decoding the matrix. So the algorithm is telling you exactly what it's going to do if you know how to read it properly. So the fact that we closed above this fair value gap is indicative that we're going higher. So I'm already expecting this fair value gap to be inversion. So look at how we reprice beautifully right to the high end of that and then immediately rally higher, using that as beautiful, dynamic, real support and resistance in line with the narrative and order flow that was highlighted on Sunday. So with that said, nothing much more here on pound. So let's go take our attention to the bond market. So bond market pretty much in a consolidation. Pretty tough read here from what I'm seeing on a weekly chart. We're pretty much consolidating within this fair value gap in here, with the bodies not showing any meaningful rally through it or any meaningful rally below it. So pretty much neutral here on a weekly chart. Given that we displaced lower, shifted market structure on a weekly, and we're having trouble getting above this fair value gap, has me leaning bearish on a weekly. However, since we're in a consolidation in a discount, I'm pretty much neutral for the most part until we get some type of movement. So looking on a daily chart now, let's refine this fair value gap to the daily. So consolidating within that, bodies respecting the low end and the high end. So until we leave this fair value gap meaningfully with some sort of displacement, I'm pretty much neutral on bonds. So let's see if the interest rates are giving any indication, helping us out. Yeah, so not seeing much here. Favoring bullishness on interest rates, which would translate to lower prices here on bonds. So overall, gun to my head, I'm favoring lower prices on T-bonds because we are seeing bullishness in the interest rate market, seeing bullish order flow, down close candle supporting price. So I would favor these relative equal highs here on the interest rates for the 10-year yield, and then I want to see how we trade inside these premium levels. So favoring higher on the yields, lower on T-bonds. So I'll be interested to see how that pans out after this week. So awesome. Let's go ahead and get into the S&P. I'm sure what you guys have all been waiting for. So let's go up to a weekly chart. check my notes real quick. Okay, awesome. So let's go ahead and look at this weekly chart here for S&P. So clearly bullish order flow, down close candles, discount erase, supporting price beautifully. So last week we got that expansion higher through this weekly buy side liquidity as a weekly objective here. Nice expansion through that. And then we completely repriced this fair value gap here in premium, beautifully trading to the high end of that. And then the drawn liquidity, the final target I gave you guys was this volume imbalance. Here, I'll make that blue, and then we fell just short of that. So not perfect. However, if you're going long and we're expecting it to draw into these levels, you can still find plenty of profitability within this type of move here. So moving into this week, I do favor an expansion higher. I'm not going to look to call a top in this market into this volume imbalance here. And then once we trade at this volume imbalance, I'll want to see how we trade in these premium levels. And then I'll also be referring to dollar index. So as you guys know, I'm not just looking at one market to validate or quantify an analysis. I'm looking at several markets, inter and intra market analysis to confirm what I'm looking for. And then as I highlighted to you guys many times, that's what makes what we do here high probability and simply put, just next level. So I'll be expecting higher expansion here into the volume imbalance, and then I want to see how we trade here. Do we come or seek the buy side here? Do we close above it, use it as support to trade higher? I'll be interested to see that. Or do we trade into it and break down? I'm not sure, and I'm not worried about it. I'm trading the market I have in front of us, and then when we get there, we'll adjust and look at what we need to. So overall, expecting a expansion higher on a weekly chart. So some further tools I used, I'll go into a little bit of deeper price action analysis with you guys here. As you know, I don't have time to share everything, as these things would go for well over 4 hours, but I'll show you guys how I grade price swings. So here, if this is the inception of the move, and this is terminus, or where I'm expecting the market to draw to, we can take gradients of the price swing here. So here we have 75, 50%, 25, and then this is the ultimate drawn liquidity. So this is the inception. So look at how we consolidate at the 50% of this implied fair value gap. It's not implied fair value gap, implied dealing range. It's an implied dealing range because we haven't yet created the dealing range, but I'm forecasting it's going to be created. So the fact that we see a consolidation right around 50%, which is what we expect whenever the market's at an equilibrium, it's going to consolidate. So the fact that we consolidate at this 50% here, this allows me to then trust that we're going to expand into this higher time frame premium level, and then extending this right and dropping down into our lower time frames. Extend the lines right, drop down into a daily chart. So look at how entry patterns form around these key levels. So look at how the PD arrays manifest themselves within these gradient levels that I have on the chart. So look here at the 75, what's that? Order block, inversion fair value gap, beautiful support. At the 50%, order block, fair value gap, rally right from there. And then at the upper quadrant, we see order block, trade back down into it, beautiful expansion higher. So I'm expecting the 4,500 to be a drawn liquidity. So I'll throw that in there for you guys, no extra charge on how I grade price swings and how I was able to use further market analysis to confirm that indexes are going higher. So back up to a weekly chart. Still seeing that bullish order flow, and as I said, weekly volume imbalance has my interest as long as we stay above this fair value gap here. More specifically, the 50%. I wouldn't want to see us go below that. However, given the Fed Chair Powell testimony, anything goes when the Fed is involved. So I'll wait that out, let the storm pass, and then we'll go in there and clean up with the remaining liquidity after that news driver. So dropping down into a daily chart now. So this line here is that weekly buy side liquidity that we were looking for. So beautiful expansion right through that on Tuesday. Monday we opened up, aggressive expansion. Tuesday, beautiful expansion right into the premium levels. So one thing I did want to highlight is look at this gray shaded area in here. This is that weekly fair value gap. Look at how once we close above it here, where do the bodies stop? Where do the retracements stop in here? Right at the low end of that. So I'll even throw something else in here. Why I'm expecting this fair value gap to remain open? Because it's a measuring gap. So if this is the breakaway gap here, this low, how it doesn't fill in, but keep in mind, we're expecting the market to trade up into here. Why? Because of how I graded the price swing, the order flow, bearish dollar, bullish bonds, bullish for foreign currency. So everything comes into alignment for this to line up. So now this is what makes our technical analysis elite and beyond anything else that exists. So looking at this fair value gap here, that's a breakaway gap. So the subsequent fair value gap that forms at 50% of the price swing we're expecting should remain open, as that's how the algorithm is going to indicate that it's going to want to deliver higher. So looking at this fair value gap from here to here, we want to get some fib projections. So from the breakaway to the measuring gap, because if we're expecting it to deliver here, look at how this fair value gap falls right at 50%. So I don't want to see this fair value gap fill in, and then also look at how we find support at the low end of that weekly fair value gap, further allowing me to trust that we're not going to fill in here and just reach for the premium objectives. So looking at this here, I'm going to want to duplicate this range from this candle's high to this candle's low, from the breakaway to the measuring gap, duplicate this range higher, and this gives us that -1 fib projection, and then I'll be looking for that as an upside target. So let's say we just crash down from here. Is this a failed analysis? Absolutely not, because we got all the meat on the bone from this move higher. So plenty of money was made in here on the move higher, whether you're a swing trader, intraday trader. I trust you guys knew where the market was going if you follow us here. So even if we don't deliver, 10 handles higher into that objectives, is that an incorrect analysis? Absolutely not, because as I said, we're eating off the meat of the bone within this expansion higher we're expecting. So throwing a little bit of advanced technical analysis into here that I can't usually cover on the daily, because as I said, these things could go on for 4 hours if I covered everything. But so now going into the analysis for this week, some further things, looking at this fair value gap. Let's extend that through. You guys came to learn today. So looking at this fair value gap in here, I also highlighted why this was a bullish signature. Because we were unable to trade to 50% or consequent encroachment, I said this makes this market extremely bullish. So from the point of me saying that here after this Friday when we closed, opening on Monday, delivering higher, how many down close candles are in this price range from here when I called the market higher? With all these bullish signatures, the fact that we were unable to trade to 50%, how many down close candles are in this price range? None, until we reach our premium levels. So all these analysis concepts are what I'm using to forecast the market, and is what I'm using to call the market for you guys. And that's why it's extremely precise, because all these analysis concepts are going into it. So the fact that we're unable to even reach 50% indicates the market's extremely bullish. So as I said, once you know how to read the market, it's always going to tip its hand as to what it's going to do, as long as you know how to read it properly. And then we got this beautiful expansion into our premium objectives. So as long as we see further downward pressure on dollar index, I would favor higher prices on indexes. So I would want to see how we trade within this fair value gap in here. And then more specifically, the consequent encroachment of this weekly fair value gap. So I would want to see some sort of reaction here at the 44.28 level, which would be 50% of this fair value gap, and this fair value gap in here, see if it wants to pump down into there. What I will be interested to see is if we form a swing high here, we could likely see a deeper retracement, but I'll be monitoring that. And then for those of you guys that are in the Telegram, I'll keep you guys updated and share with you guys what's important to me and what I'm seeing during the week. So I would favor higher prices from these key levels, not random ambiguous zones. We're looking at very specific refined levels within these inefficiencies. So also within here, I will be looking at the low end of this fair value gap, looking for a reaction here to give us that expansion higher into our premium levels. So with that for ES, let me go ahead and share some price targets. Nothing much here to work with on a daily, so I'll go up to the weekly for the price targets. So first level here would be let's call it 4,500 big figure number. If we go after the buy side liquidity above previous week's high, we're definitely likely going to expand into the volume imbalance. So as a first level, 4,500. Second level of interest would be 45.38, and then through that takes us into 45.73 and a quarter. And then how we trade there indicates whether we go higher, and I'm not convinced we're going to do that yet. I want to see how we trade at that levels, and then of course what dollar index does. So on the hourly now, Thanks for that, Gem, with the dealing range. Thank you, Denisha. Glad that was helpful. So looking at the dealing range here on an hourly now, extending the variance. So right around that 50% level of the weekly fair value gap, which is that gray shaded area, we also have a discount fair value gap. So just looking at the actual dealing range now from high to low. Let me take this level off. It's getting too busy. So discount valuation is now below. Let me start from here. Is now this fair value gap in here and this one. So I would want to see how we trade down into these discount levels, because if dollar is bearish as I expect and we flush and continue dropping, then I would want to see some type of Judah swing on S&P, trade down into these discount levels in here, more specifically the fair value gap, and then I would want to see some type of responsiveness in price telling me it wants to go higher into these premium levels. So that's the framework I'm looking to work within for S&P going into this coming week. Going to my notes. Awesome. All right, let's go and take a look at NASDAQ and Dow real quick. So nice expansion higher on NASDAQ. No surprise to us. We've been looking for that in line with the lower dollar. So let's look at the continuous contract, which is what I wanted to share here. So we just traded higher to these key premium levels. We have relative equal highs here on a weekly chart. So buy side liquidity remains there. Maybe asking who has buy stops here from over a year ago. Large hedge fund traders, they trade like this. They employ long-term trading models. So they're going to be short riding the trend, and they're going to trail their stop loss. They're not in a hurry to rush their stop loss because they're managing millions, billions of dollars. So they're not, smart money's not after retail Rick's 5 contracts or 2 or 3 contracts. They're after the big fish in the water, which are these hedge funds, and they trade like this. So that's why the market gravitates to these key levels, and then we had a beautiful repricing higher here. So looking at NASDAQ now, given that we've traded into a premium of the dealing range we're in on a weekly, I'll be interested to see how we trade inside these premium levels here. So we have a bearish order block in here. I would look at this one as our bearish order block. Sending that through. So that'd be a nice upside objective here on a weekly, given that we traded above the buy side now into this bearish order block. I'll be interested to see how we trade here at this key level. So that's an upside draw here for NASDAQ. And then let's go to the official contract now. So still favoring bullish order flow. These relative equal lows, I believe we have unfinished business there. So if we do trade higher, reach our premium objectives, we could then rotate then into a sell program. However, not going to call a top in the market. So going to trade the bullish order flow until we have something that cements a bearish bias. And then, as you know, I'll keep you guys up to date here as being a part of our community. So let's go to Dow real quick. I wanted to share one thing. So I actually called this trade setup here for you guys on Dow. And this is in line, as I said, with the A+ trading model. I'll see if we can cut this as a video clip. But when we traded down here into this fair value gap, this is a Friday. Okay. So I told you guys here that this bullish breaker would support price. Where are we going to go? We're going to draw into this buy side liquidity. So as I said, if you're not able to trade these intraday charts, the same things are happening on a daily, weekly basis. So the fact that we trade down into this fair value gap, which is within this breaker, after taking sell stops, displacing higher, shifting market structure, I'm trusting this is a long. So I highlighted to you guys when price was down here that this is the A+ trading model and that you could use this to get long into the buy side liquidity using the order flow, intermarket analysis, and the whole concept, the whole library of concepts that we employ. So beautiful delivery here. Called this trade out to you guys on a daily chart. So actually moving forward, one thing that I did want to share is I may be doing an analysis service moving forward. The same thing you guys see me here doing on a daily and weekly chart, calling the markets for you guys. I'm doing the same thing intra-week on an hourly chart, 15-minute. So what I may do is, obviously these Sunday streams are always going to be free. I'm always going to keep this here for you guys to provide value to the community at no charge. But what I may be doing is the videos that I'll start doing in the middle of the week, I may charge a little bit and have that service so that I can start doing the same thing you guys see me here doing on a weekly and daily chart and providing you guys this same level of analysis, however, on a hourly and 15-minute chart and covering your specific market, whatever you want to look at. and that's something that I may will likely go into moving forward, as I don't have the facilities to do this on a daily basis throughout the week. But the same thing that I do on the higher time frames, I can do intraday for you guys. So that's something that I may do. So keep a heads up for that moving forward. So beautiful expansion on Dow. Next levels of interest here are these relative equal highs, and I'll be interested to see how we trade there moving forward. So that's going to be it for what I had in terms of my notes. So maybe I'll get to a couple questions here and then let you guys get going. Awesome. So let me go and get into the questions. Alistair, what's going on, my man? AB, what's up, brother? May appreciate your dedication. Thank you. Hassam, what's going on, my man? Hello, Dylan. My name is Caleb. Hey, Caleb, how are you doing, brother? Thank you for the support. I appreciate it. Richie Rell, yo, what's going on, my man? J-Rod, what's going on, brother? Denisha, thanks for that gem with the dealing range. A pleasure. Glad it was helpful. Semper, hi, Adora. Appreciate your work. Question. Yep, absolutely. Go ahead and give it to me. That's why I'm here. Thanks for joining us. Nakeem, great idea. Glad you like that idea. And then Mayoakim, could you look at gold? Yeah, let me go and take a look at gold real quick. Take a look at gold. Let's go to a daily chart. GUSD. Let's look at the forex.com feed. Let's look at a weekly chart here. So we have these relative equal highs. That's the bullseye for me that I'm looking for. So I will be interested to see how we trade down into this weekly fair value gap. We've pretty much just been in a sideways consolidation, which is why I personally don't have a lot of interest or like trading gold. There's a lot better markets, in my opinion, to trade. However, if this is what you like to trade, do you? So looking at this thing on a weekly chart, we formed that swing high here. We've traded lower off that into discount, and then we've repriced into this fair value gap here on a weekly. So I'll be interested to see if we find support in here and then trade higher into that buy side, or if we continue to roll over lower. So dropping down into a daily chart now. So I was looking at gold last week when we opened here on Monday, and I said I favor bullishness if we trade above this high and through these up close candles. And then notice how we failed to. The opening price extending that through. None of the bodies were able to really mount meaningfully above that. So then we traded lower down into that sell side liquidity. Trade down to the sell side, immediate rejection, higher. So really looking at this market pretty much neutral, as you know, we don't have any inefficiencies or displacement to work with. So gun to my head, given that we traded into that weekly fair value gap, we've rated the sell side here once, twice, 3 times now, and then rejected it. I'm favoring higher prices. We have relative equal highs and a fair value gap in here, and that's going to make or a bearish dollar is going to make it much easier for gold to rally based off that. So just based off that alone, I'm favoring higher prices. This isn't high probability to me, so as I said, I wouldn't go out and mortgage and refinance the house and try to trade long gold based off my analysis. That's just what I'm seeing. So take it with a grain of salt. As I said, it's not a high probability trading condition. Until we get a displacement out of this range, then we'll have much more animation on gold. Looking at it. Yeah, that's it for gold. Bean, how can I join your Discord? So there's currently no Discord. We have a free Telegram community that everyone can be a part of. And as of right now, there's no premium or exclusive community. If there is, I will make sure you guys will be the first to know for sure. J-Rod, thanks for explaining everything, bro. Makes sense. Awesome. Glad it's giving you that clarity. That's why I do it. May, spot on analysis as always. Thank you for all you do. Nobody is doing it like you. I really appreciate that. Thank you. Alistair, you saw my comments from Telegram on intermediate term highs and intermediate term lows. One moment, guys. Apologies, guys. The trouble of live streaming overseas in foreign countries, they have people that are selling on the street, and I'm not sure if that affects the audio quality, so that's why I muted myself. So back to the questions. Alistair, you saw my comments on Telegram from intermediate term highs and lows. Yes, I did. So let me go ahead and cover that question. Take a couple more and then let you guys go, and don't want to be on here too long. Go ahead and look at that question. So would you be so kind as to talk about intermediate term highs and lows and how you use it to help establish direction for higher time frame down to lower time frames, and possibly also for scalping? Basically lesson 12 of ICT, but in your own words as you explain things so much clearer. Many thanks in advance. I appreciate that. Thank you, my man. Yeah, I'll go ahead and cover that for you, Andrew. So let's look at Euro, a market that we've been following here pretty closely. It's been moving pretty clean. So I'll go ahead and share some things here on market structure. So let's go down into a lower time frame, and let's zoom in on this fractal in price right here. So I'm going to make this fair value gap here yellow, so it stands out. So this is that daily fair value gap. So remember, before the market even started printing candles on Monday, I told you guys we'd trade down into here, find support, and trade higher. So no hindsight. Now let's go into how I'm using this intraday, and also incorporate some market structure into how I do my analysis. So looking at this fair value gap in here, remember, we're already looking for price to want to rally from here. So now let's look at the discount arrays that are in alignment with that. So if I'm expecting a low of the week to form Monday, Tuesday into an expansion higher, I'm going to then look for market structure to get into alignment. So what does that mean? Let's go ahead and look at that now. So keep in mind this yellow is that daily fair value gap. And then we also have a mitigation block. I'm not going to keep it on here because it's going to convolute the chart. But looking at this level, we have a mitigation block. Why? Because low, failure swing, this last candle is that mitigation block. So we have a mitigation block. We have that daily fair value gap, and we have this hourly fair value gap in here. So, and it's also a discount of the dealing range. So from this low to high, the dealing range, we trade into a discount. So now that everything's lining up for us to, this is why I'm looking for longs at this specific level. So now let's look at how I incorporate market structure into my order flow and intermarket analysis and everything for calling for higher prices. So let's focus on this price fractal right in here. Go ahead and make it gray, so we know what we're looking at here on the lower time frames. It's going to make that gray. Awesome. Okay, so keep in mind these are discount levels. We're looking for market to rally here. So now let's drop down into a 15-minute chart and look at some market structure. So we trade down. We see our Judas swing of the week, manipulation lower after the weekly open here on Monday. So now how do I incorporate market structure? So what I want to see once we trade down into here, I want to see confirmation that the algorithm wants to reprice higher. As I said, it's always going to indicate everything it's going to do before it does it. So market structure is one of those things we look for. So we open, we displace higher. What's this here? This is a shift in market structure. So we're not simply looking at elementary market structure, which is higher high, lower low, higher high, lower low, higher high, lower low. We're grading these swing points and classifying them specifically. So because we shift market structure here, that's all the algorithm needs to now go into a buy program. So we're already looking for higher prices top down. We have this confirmed in lower dollar. We traded down to the discount levels. So now once we trade down to my discount arrays, I'm going to look for market structure to then get in alignment with what I'm already expecting. So I'm predicting market structure before it even prints how it's going to. So as I said, shift in market structure here. So this is now my green light to expect longs. Where are we going to go long into? Well, here we have relative equal highs here, and all these clean highs here would be a beautiful target to expand into. So once we shift that market structure here, I'm already forecasting this being a failure swing. I'm not expecting us to make a lower low. Why? Because this now becomes a significant low. So yes, it's an intermediate term low. It's an intermediate term low because there's a higher low to each side of it. So short-term low here and short-term low here. But I'm expecting this low here more specifically to not be violated because it already did the job of running the sell side. So if we're now going to reprice higher, this low already did the job of running out the stops. So it has no reason to want to come below this. So I'm already forecasting this low here forming a failure swing or a higher low according to technical or classical technical analysis for retail. So I'm already forecasting this being a failure swing or a higher low. Into what specific level? Well, here we have a breaker low, lower low, last consecutive up close candles. Extend this through. Let's go ahead and make this blue. So we have our breaker. So I'm expecting a higher low to form within these key levels within a specific time, because what is this? This is the European or London kill zone. And then we expand higher. So now let's look at another example here. So it's bullish. We're expecting higher prices. Let's go back up to our hourly, using it as our higher time frame for this example. And then let's play price. All right, beautiful. Okay. So we're bullish on the week. We're expecting higher prices. So this displacement higher here also leaves what? Relative equal highs. So if we're looking for all the premium objectives that I highlighted on daily, which is much higher than we are here, what's this return into this down close candle? That's a bullish order block. So I'm expecting reaction here. So now we'll look at market structure within this discount array, and we'll go ahead and qualify what it is we look for. Put on the bottom, 12, awesome. Okay. So we trade down into discount, also optimal trade entry. Let's see. So optimal trade entry, bullish order block, and a discount market when we're already bullish. So now let's look at this fractal of price action here. Let's make this gray. Boom. Let's look at this on a 15-minute chart. So as you know, we were looking for higher prices, so we're going to look for a bullish order block to get long as institutional buying occurs there. So note here all the sensitivity around that bullish order block on that hourly opening price. So look at how many times it's offered here. Why is the market offering prices here? Because as you guys knew and Smart Money knew, the market's gravitating higher. So this is used as a discount buying opportunity to then distribute where? The buy side here, and then all the objectives that I highlighted to you guys on a daily chart. So now let's drop into a 5-minute here and refine this a bit more. 5-minute chart. Awesome. Okay. So within this discount valuation in here, we trade down into that hourly order block. So now I'm going to look for market structure to get in alignment. So this low here runs the sell side, runs the stops here, bodies beautifully respecting that hourly fair value gap, algorithmic delivery, precise as we would expect. And then we see what? A displacement higher shifting market structure. So now that we have that shift in market structure inside of our discount objectives after being long top down, we then expect market structure to get in alignment with what we're expecting, which is price trades down into what level? We have a breaker here, or actually it would be right here. Excuse me. So high to low. This would be our breaker. And fair value gap. So if I'm expecting us to rally, am I going to expect us to make another low? No, we don't need to. Why? Because we already repriced the bullish order block and we already ran the stops down here. So it doesn't need to make a lower low. We're going to expect support to be found inside the bullish order block. So that's also market structure, because why am I not expecting a lower low trading through that order block? Because the order block is going to act as real institutional support. So I'm also going to expect a lower low here on this higher time frame fractal. And now zooming in on the lower time frame, we then allow market structure to get in alignment at the discount arrays that we're already looking to do business at. So we trade higher here, shift market structure, trade back down into the breaker and fair value gap, and then just put this on 10 so I can play real quick. And then beautiful expansion higher in line with the daily bias that we're looking for. So yeah, that's going to go ahead and cover the market structure and how I look at that as it relates to intraday and even higher time frames. I'm doing the same thing on higher time frames. And if you want, I can even cover market structure more intricately moving forward if you would like. So hopefully that covered your question there, Alistair. In the New York PM session, on what time can I anticipate a Judah swing? And or when can I anticipate there will be no Judah swing? Makes sense? Yeah, that makes sense. Futures market, gotcha. So I actually did make a video on how to trade the New York PM session. I would counsel you to look at that. As far as the Judah swing, I'll answer your question here. So we'd expect the Judah swing from 1 to 1:30, which is why whenever I'm trading the PM session, I'm going to wait till 1:30, most of the time even 1:45 too, because then that allows that lunchtime manipulation. That lunchtime manipulation occurs anywhere from 11 to 1 o'clock. That's that lunch hour macro that can run back on the stops and give us that Judah swing as you're asking. So I'll expect that Judah swing to be done by 130, 145. So typically that first market structure shift that occurs after the Judah swing after 130, 145, you can typically trust. But you always need to wait for that run on stops first, as if you enter too early, you will be the run on stops, and you want to avoid that. So you want to allow that stop run to occur, wait for market structure to get in alignment as I showed here, and then that's how I would tackle the PM session. And then you can go ahead and look at that video, and that'll even give you a further amplification of other analysis concepts that I use specifically for the PM session. Mayo King, wow, thank you for this explanation on intermediate term highs. Awesome, glad that was helpful. Then all right, we'll go ahead and finish here. Nakeem, can I look at Euro CAD? Yeah, I'll go ahead and look at that. Alistair, many thanks, many thanks, sir. Awesome, glad that was helpful for you, brother. All right, let's go ahead and look at Euro CAD, then I'll finish here. Daily. RCAD. Okay. So clean delivery here. This market's moving pretty cleanly. Buy side. Let's go up to a weekly real quick. So relative equal highs here on the weekly chart. That's interesting to me. For right now, the order flow is bearish. So looking at a weekly chart, I'm favoring these relative equal lows here. And let me go ahead and put an alert for that so I can see if my target hits or not. All right. So I'll be looking for these relative equal lows here on Euro CAD since order flow is bullish. We made a 3 drives pattern, displaced lower, shifted market structure. So now that we're trading up into this fair value gap, I expect this to act as resistance to send us lower into these discount levels. And then how we trade here will be interesting. Do we trade down below the lows, reject, and go higher? Or do we continue lower? That'll be for next week's analysis. Right now we trade the market we have in front of us, which is lower prices. That's what I'll be looking for on Euro CAD. Looking at a daily chart now. Buy stops ran, strong displacement lower here, shifting market structure. And then we see here a breaker here, and a fair value gap. Body's beautifully respecting that. So what's that breaker overlapped with the fair value gap? You guys know what model that is. Highly effective when you know where the market's drawing to. So bearish order flow on a daily chart. And then as I always highlight, why didn't we trade up into this fair value gap? Why did we expect this one to remain open? Because it's the breaker. The breaker's not going to let it reprice higher through it. So I'm going to forecast these being breakaway fair value gaps. And then we're expanding lower into the discount levels that I highlighted on a weekly. So looking at this here on a daily chart now, we have relative equal lows here. I'll expect that to be the drawn liquidity going into this week. As long as we remain below this this up close candle, here, I will expect lower prices. If we trade above it, then that would invalidate what I'm looking for, and then we'll simply get in line with what the market's showing. However, I'm favoring a nice reaction lower from here. The reason I wouldn't favor us going above this is because this is balanced price range. This is efficient delivery. This is traded higher, lower. Here we opened higher once more, and then we've left it. So from this price here to here, this is all efficiently delivered. So it would take a lot for price to get through this efficient delivery. So I wouldn't favor that if we are going to seek sell side. And if we do, that indicates something in and of itself. So hopefully that covered Euro for you. Or not Euro, Euro CAD for you, Nakeem. Semper, great bud, much appreciated. Olawale, straight gold, much appreciated. Awesome, glad it's helpful, my man. Denisha, great explanations as usual. Have a great trading week. See you in the Telegram. Don't forget to give the stream a like before you go. Appreciate the support, Denisha. And then as always, guys, please give me a like and stream if this was helpful to you guys, as it helps our team here. And we'll continue delivering this value for you guys at no charge. So appreciate you joining us, Denisha. Have a great week. And then as always, we'll be in touch in the Telegram, everybody. So yeah, as I said, that's going to be the last question. So I'm going to go ahead and wrap it up here. And then Nakeem, grateful. Glad to have you. Thank you, my man. Mayowa King, I love this team. Glad you like it. We like winning over here too. So it's not bad being on the winning team. So thanks you guys for joining, for supporting. And as always, we're going to keep doing what we do best, and that's winning over here. So looking forward to a great week. Everyone take care, be safe, and then as I said, we'll be in touch in the Telegram channel. So you guys take care. And then let me give a shout out to my man Mohammed Ali for becoming the first member on our YouTube. Moving forward, we may just prioritize members only questions, as it'll be a $5 investment on your end per month. However, because of the volume and influx of questions I'm getting, I don't want to give any half-assed answers or not answer things appropriately. So what I'm going to potentially do is just focus on member questions and still, as I said, provide this to you guys for free, but focus on member questions for those of you guys that are showing support. We'll also help you guys out as well. So that's something we may do here moving forward, but just a shout out to my man Mohammed there, and then more on that in the Telegram throughout the week. As I said, we'll continue having this all for you guys at no charge. So Stanley, thank you, first time. Glad you enjoyed it, Stanley. Thanks for joining us, my man. Looking forward to having you here more. Gabe, thanks. Thank you, my man. Appreciate you joining. Mayoa, I appreciate you, man. Thank you. Thank you for joining. Awesome. So with that said, I think that's going to do it for us. Have a great week, everyone. Take care and stay safe.